Welcome to The Explainer. Sometimes you get an earnings report that just doesn't seem to add up. The headline numbers are down, but the company they sound thrilled. So let's get into it and figure out what's really going on. All right, so today we're talking about Packaging Corporation of America. You probably know them as PKG. And their latest earnings report for Q4 2025, it's a real head-scratcher. I mean, they missed their targets, but if you listen to their leadership team, you'd think they just had the best quarter ever. So what is the real story here?
Okay, let's just get the bad news out of the way first. When it comes to earnings per share, they missed the mark by 9 cents. Now that's not a catastrophic miss, but hey, a miss is a miss.
And it wasn't just earnings. Look at revenue. They were short by over $66 million. So yeah, if you just glanced at the headlines, you'd probably think, woof, rough quarter. But that's not even close to the full picture.
To really get what's happening, we've got to pop the hood and look at the engine. Because there were these massive forces pulling their earnings in totally different directions. It really was like a financial tug of war.
Okay, check this out. On the one hand, you've got this whole list of things dragging them down, right? Lower volume, higher operating costs, more maintenance, all that stuff was a major drag on earnings. But then, look at the other side of the rope. Just one thing, their ability to charge higher prices pulled back a whopping 50 cents per share. That is incredible. It tells you right away that even with all those headwinds, they had some serious pricing power.
But that's not the only thing going on. There's another huge piece to this puzzle, and it's a really big strategic move they made. They just bought a bunch of containerboard business from a company called Greif, and you could definitely call this a calculated gamble.
And this right here just lays out their whole strategy perfectly. Yeah, in the short term, it hurt. The new business actually lost them 5 cents a share this quarter. They had to shut down mills for big upgrades, sort out a bunch of inventory they inherited, all the messy stuff. But their eyes are on the prize. The long-term goal, more capacity, because they see a wave of demand coming. They're expecting this whole deal to be modestly accretive in 2026, which is just a fancy way of saying it's going to start making them money instead of costing them money. They're absolutely playing the long game here.
And listen to the CEO on this. He's talking about a massive effort here. They didn't just, buy the keys and walk in. They sent in a small army of their own people to basically rebuild one of the mills to their high standards. They took the hit now so they'd be completely ready for 2026.
So you've got to be asking, why? Why go through all that trouble and expense right now? Well, the answer is all about the signals they're seeing in the market. And let me tell you, those signals are flashing green. This is reason number one for all that optimism we talked about. Their CEO said that the order book started getting stronger late last year, and then January hit and things just exploded. We're not talking about a little bump here. This is a major, significant shift in demand.
Just how significant? Get this. Bookings in January were up 11%, and that's compared to a January that was already strong last year. That is a huge jump. It's a crystal clear sign that customers are buying a lot more stuff that needs to go in a box.
In fact, the demand is so intense, the company president basically said they're going to have to run everything they've got, the entire system, at full capacity for the entire year of 2026, just to keep up. And let me tell you, when you're a manufacturer and you're running flat out like that, you're in a very, very good position.
And what does that position give you? It gives you pricing power. Remember that from the first chart? With demand this high and their mills running full tilt, they have the confidence to go out and announce a pretty big price increase, $70 a ton. This is exactly the kind of leverage that gets investors excited.
So, Packaging Corp isn't just sitting back and riding this wave. No, they are actively pouring a ton of money back into the business to make sure they're in a strong position for years to come.
Just look at their capital expenditure plans. That's the cash they're spending on big upgrades and new projects. They're talking about $840 to $870 million for 2026 alone. That is not a company that's scared. That's a company that is building for the future, big time.
And they're not just throwing money around. This is smart spending on really high-impact stuff. We're talking new gas turbines at a couple of their mills to make their own power. That's a huge deal for energy independence, and it should get them great returns. They're also finishing up a brand new giant box plant in Ohio and upgrading a couple of other big mills. The key takeaway here is that every single dollar is being strategically pointed at making them more efficient and fueling that future growth.
So when you put it all together, the massive investments, that big acquisition we talked about, you get a really clear picture. This is a company that is incredibly confident about what's coming next. They are all in on building a stronger, more profitable business for the long haul.
Okay, so what's the big takeaway here? I mean, why should you care about a company that makes cardboard boxes? Well, because it's about so much more than just packaging.
This quote from the president really nails it. You see, the demand for cardboard boxes is what economists call a leading indicator. It's a sneak peek into the health of the whole economy. Think about it. When people and businesses are buying more stuff, you need more boxes to ship all that stuff. It's a super simple connection, but it's a really powerful one.
And the leadership at PKG, they aren't just looking at their own numbers in a vacuum. They see this huge surge in their orders as a piece of a much bigger positive economic puzzle. They're pointing to rising GDP, consumers feeling better about spending, and the fact that wages are finally getting ahead of inflation.
So, here's a thought for you. The next time a box shows up on your doorstep, maybe give it a second look. Because that simple cardboard box you're about to recycle, it might just be telling you something really important about where our economy is headed tomorrow. It just goes to show you, sometimes the biggest clues about the future are hiding in the most ordinary places.